Hi, and welcome back to Tim Biggin's Options and Volatility newsletter. Be taking a look today at a huge, and I do mean huge, vol capture trade opportunity in Poet Technologies, POET, one of the kind of second derivative AI stocks out there where some huge repeat call buying spiked the implied volatility surface to extreme, setting up ideally for a vol capture trade. So let's jump in and take a look, shall we? First of all, here's the chart on Poet. You can see the stock just ripping higher as it just went parabolic, finally running into a little resistance today, hence the reason for jumping in today on the trade. You can see getting overbought by far on every technical metric out there. But just as importantly, it showed up. This is from 2 days ago on the scanner I built on Thinkorswim. Here you can see Poet, right, showing up on my unusual option activity scanner that identifies lifts and implied volatility as well. Certainly dominated by Poet options, to say the least. If we go down a little bit further, you can see this is from yesterday, continued option buying here. This is a different scanner, right? Almost 550,000 options traded versus an average, and this includes the day before, which boosted the average of less than 18,000. So 31 times the option volume, as you can see, trading at the 100th percentile. So certainly a big volume increase as well in Poet. We can take a look at the IV. Here's from that first day we looked at. You can see that huge implied volatility pop, right? I went out to the 120-day options, but went across the board, as you can see here, lifted the entire vol surface, just absolutely spiked. Here it is taking a look at the money IV on a general basis, which had been hanging around that kind of 80-ish level, exploded over 120. You can see most of it in the calls, right? Call IV actually far exceeding put IV, which is also a sign of speculation, to say the least. You can see 2 days ago that current IV percentile at the 80th percentile. Given that the VIX is near the lows of the year, this certainly is a very nice opportunity. You can see almost 600,000 calls traded 2 days ago versus only 10,000 puts. Here's that huge lift in implied volatility, right, across the term structure of vol, right? You can see each expiration date, the amount of contracts, and the change in IV. Fast forward to the following day, yesterday, right, we see even a bigger lift in Poet IV. You can see IV even heading higher from the previous day, right? And the previous day was this massive lift we saw, right? So it's getting certainly an extreme out there in Poet. As you can see, IV percentile, as we looked earlier, at the 100th percentile. They've never been this expensive. Seeing just more massive repeat call buying out there. You can see again, here is that implied volatility heading higher yet again. Tons of volume as well. We can see here it is over the course of those 2 days was trading, as we said, basically around that 80-ish level, went to 121. And then yesterday over 170. Call IV far exceeding put IV as well, usually a sign of speculation too. Here it is, just pulled off on a different sort of look. I pulled off the 30 and 90-day, slightly out of the money IVs. Here, as you can see, basically remaining fairly constant. Then, when we saw that huge call buying, right, and the spike in the stock, we saw IV just go to the moon out here. So this sets up ideally for a couple of vol capture trades. So if we take a look at several of them, here's the Jan 10 straddle. I pulled it off from last Friday to basically yesterday's close. You can see the stock closed at 650. This was before that big repeat call buying, right? That Jan 10 straddle, right, which is basically well out of the money, right? You want the stock to move towards 10 anytime you sell a straddle. Trading at $4.30, basically the puts deep in the money, the calls trading at fairly nominal value. Absolutely long delta if you sold it right. You're selling it deep in the money put, selling it way out of the money call. So you'd certainly be long, if you will, net as far as from a delta perspective, kind of a pseudo stock perspective. IV at the time just trading under 90 as we saw on that previous chart, right? When we took a look at IV, here it was trading right around that 90 level before that big lift out there. We can then fast forward to yesterday's close. The stock closed at 922. That Jan Trend straddle actually went up in price by $1.10, even though the stock approached the ideal strike price, $10. Anytime you sell a straddle, you want it to go towards that straddle strike price of 10. This absolutely did, right? But that should normally cheapen the price of the straddle. Instead, it went up huge, right? Why? Because we saw that massive lift of almost 50 vol points out in Jan, right, on the IV. So certainly selling that Jan 10 straddle would make sense. Your delta, if you would have done it, even though the puts were still in the money, the calls out of the money, because of the lift in IV, you get that upward drift. The call delta actually starts to expand because of that lift in IV. So you'd be, if officially, net 22 delta short, but over that spectrum, you'd have been long with the stock going up about 3 points. You'd expect to make some money by selling that straddle. Instead, it would have gone against you hard. So sets up ideally for selling that straddle now. Same thing looking if you want to get a little further out of the money out in Jan on the $7 put, $14 call, right? Selling a strangle. Give yourself a little bit more room. Here it was the day before, right, last Friday. That big call buy, you can see, was trading about $1.70. IV at the time right around 90, as we said. Fast forward to yesterday's close, it went up to 275, so went up $1, and it's the ideal price, right? You're still further out of the money on the calls. The $14 call is over 4 points out of the money. The $7 put is just about 2 points out of the money, right? So you're in an ideal situation, but yet that strangle exploded by a point higher. Why? Because when we see IV now at 140 pretty much, right, where before it was hanging around that 90-ish level. So that huge jump in IV gave you an opportunity to sell some very nice premium. And then here's the trade that I kind of like the most, and we'll take a look in a second, a little bit shorter term, right? So this again was from last Friday. The stock closed at 750. The NOV 714, or 812, I should say, strangle, right? Let's change that up here. I had that from the previous one, but the 812 strangle, right, was priced right around $2, as you can see here, right? The delta on it, because you're selling an in the money put by $1.50, well out of the money call, right? You would have been net long 60 delta. So certainly a bullish trade, right? If you sold this and you have the stock go up, you'd expect to make some money, right? IV at the time hanging just below that kind of $100 level, right? On November. Fast forward again to yesterday's close, you can see the stock at 922, and again that NOV 812 strangle, right, selling the $8 put, the $12 call, right, now exploded to 290, so it went up almost 90 cents, even with the stock at a perfect price. If you're short the strangle, right, you're short the $8 put, it was in the money, now it's out of the money, the call still over $2.50 out of the money, but yet because of this huge lift in IV, right, of almost 80 vol points, that trade absolutely headed higher, now trading around 290. Here's a trade I actually did in the account just on the opening today. You can see able to sell that strangle, selling the NOV 8 put, NOV 12 call at 290, selling about 178-ish average IV, give or take, but certainly a very nice vol capture trade. Stock was at 923 at the time. So we'll see how this works out. And we don't look to have this thing expire worthless at all. Once IV reverts back towards that lower level, right, towards that 125, we'll certainly look to take it off. Taking a look at the Theos, here it is from a theoretical perspective. So just simply put in using kind of the original IV. Here's the calls, here's the puts, right, with the IV at that kind of 175-ish level, that theoretical, around 285, as we said, 285.90. Delta, you'd be officially 16 deltas net short, right? because the calls, even though they're further on the money, because of the huge IV pump, right, that upward drift pushes the delta up on it, right? So you'd officially be 16 deltas net short, but have plenty of room on both sides, right? As far as, to kind of manage the trade, right? The puts are out of the money, the calls well out of the money. So 285 is theoretical. Left everything the same except brought IV from where it was at, roughly around that 175 level, right, to 125, where we would consider certainly taking that trade off. We're not looking for a reversion back towards that 85 level, right, where it was at down here, right, that 90 level, right, simply looking for it to revert back. Reversion becomes sticky as it heads lower, but at a 125 IV, right, which is certainly elevated from where it was last week and pretty much where it was the day before yesterday, right, when we saw the original big call buying. But at that 120 IV, the theoretical on the sell string would only be $1.70. You'd be actually able to make a dollar just by having IV revert from ridiculous levels to fairly overvalued levels, right? Theoretical price on the calls, right? $12 call, 76 cents, 94 cents on that $8 put. The delta, notice now, is only 6 deltas net short. Stock, we didn't change that input at all. The fact that you lowered implied volatility, right, you have the put basically bounded by 0, right? Hence, that's why the calls, which are not bounded, have that higher delta. So provides a nice opportunity for those looking to sell volatility in a measured fashion on a absolute screamer of an IV pop in Poet. And at some point, we're seeing it, I think, today, which is why we jumped in with the stock kind of finally getting a pushback. Makes sense to jump in and take advantage of that volatility pop. So that's how we look to identify trade opportunities, structure them here at Tim Bigham's Options and Volatility newsletter. And as we always say, right, trading is all about probability, not certainty. So just make sure you position size accordingly here. So until next time, as always, here's to good trading. Take care.